Yesterday, the Nationwide Building Society released their latest house price index up to June 2024. So, in a second, we're going to take a quick look at that report. But before I do so, if you haven't got time to watch the video right now, please do save it for later. As always, it really would be appreciated if you would like and share the video. And of course, don't forget, if you've got any thoughts, comments, or ideas that you'd like us to discuss, please drop them in the comments below, and I will try to reply to each and every one of you. Okay, so let's take a look at that report. So as you can see, house price growth broadly stable in June. UK house prices are up 1.5% in June compared with a year ago. Northern Ireland is the best performing region with prices up 4.1% in quarter two, and East Anglia is the worst performing region with prices down by 1.8% over the year. Taking a look at the monthly change, house prices remained almost stagnant at just a 0.2% increase, but as I said, the annual change is now 1.5% up from June last year. The average price is now showing as just over £266,000. So commenting on these figures, Robert Gardner, the Nationwide's chief economist, he said, UK house prices are edged up by 0.2% in June after taking account of seasonal effects. This resulted in the annual rate of growth rising from 1.3% in May to 1.5% in June, leaving prices around 3% below the all-time high, which was recorded in the summer of 2022. He went on to say, the housing market activity has been broadly flat over the last year, with the total number of transactions down by around 15% compared with the 2019 levels. Transactions involving a mortgage are down even more, almost 25%, reflecting the impact of higher borrowing costs. And by contrast, the volume of cash transactions is actually around 5% above pre-pandemic levels. And this is something that we're seeing. We have noticed a considerable slowdown in the number of mortgages that we've been writing. And it is, as Robert says, quite rightly down to the cost of living crisis and the higher interest rate environment in which we now find ourselves. People have always been used to being able to get more for their money when interest rates were lower, but now affordability is becoming an issue, so people are adapting their choices and they're actually now buying more within their means and more within their affordability range. They're not overextending themselves anymore, and they're perhaps spending a little bit less on a property than they previously would have done, which is not bad news at the end of the day. He went on to say, while earnings growth has been much stronger than house price growth in recent years, this hasn't been enough to offset the impact of higher mortgage rates, which are still well above the record lows prevailing in 2021 in the wake of the pandemic. For example, the interest rate on a 5-year fixed rate mortgage for a borrower at 75% loan to value was 1.3% in 2021. But in recent months, this equivalent rate is now nearer to 4.7%, and that shows the significant increase that we're seeing in mortgage rates. Now, of course, something that I've mentioned in previous videos, people that are going to come to remortgage later this year are going to have a massive rate shock. With interest rates changing as much as we've just mentioned, it does have a huge impact on people's monthly mortgage payments. So if you have got a remortgage that is due within the next 6 months, I do strongly suggest that you get in touch with a mortgage broker as quickly as you possibly can, because there are things that can be done to alleviate a little bit of that pain. But giving us that 6-month window does allow us to have a look at your situation in full, assess your personal circumstances, and then guide you to the right solution for you and to help you make the preparations necessary to do so. Now, the other thing that I'd also like you to consider as well is if you are thinking of purchasing, I would suggest that you probably don't put it off for much longer. The wide expectations are that there is going to be a base rate cut by the Bank of England in August. And if, as we hope, fingers crossed, that does happen, I suspect that what we're going to start to see is swap rates reducing even further, lenders reducing their mortgage rates even further, and the mortgage market and the property market actually start to really pick up in the second half of 2024. Now, if that happens, the market is going to shift, as I've mentioned before, very quickly from a buyer's market into a seller's market. That means that as buyers, you will no longer hold the power and you won't be able to negotiate on price as much. And the sellers are actually going to be able to stick to their guns and say, no, that's the price that I want for my property, and you either pay it or you move on. Now, this report does go on. It covers lots of regional information. There's lots of different graphs and charts and things for you to be able to take a look at. I'm not going to go into those in today's video, but as always, and in particular, if you're new to the channel, if you're not following me on YouTube, please do go to my beacons link in my profile, click on the YouTube channel and go subscribe to me over there, because I will put a link to this report in the video notes. I can't put a link to this report on any of my other social media platforms. So if you do want to have a look at the report in depth, YouTube is the place to do that. As always, I really do appreciate your support. Just a gentle reminder that if you're not already following me or subscribed to me, then please do so, because we do produce a lot of content that you might find useful. But once again, hope you found this useful, and take care.